on the addition side of the slide, something that I'm sure a lot of people think when they see Boeing being added to a Moat index. Boeing's going through quite a bit right now. They're seemingly in the headlines every week. Andrew, maybe you can address any particular thoughts or info on Boeing.
Yeah, certainly. And not surprised to get a question about Boeing, for lack of a better phrase. It is a spicy meatball at the time being. But I'm happy to answer the question. So first of all, Nicholas Owens covers the stock. He's our aerospace and defense analyst. So first of all, his fair value estimate is $202 a share. So while we typically don't monitor our fair value estimates relative to consensus or other sell side equity research shops, I will note that the consensus price target across the street is right in there near ours. It's $200 per share. Again, ours is 202. So by no means are we far, far outside of consensus. I also note that Boeing was trading as high as $260 per share just as recently as December of 2023. Now, obviously, a lot has gone wrong since then, or not gone to plan since then. So no surprise that shares have moved lower. But again, this was a stock that we felt was actually quite a bit overvalued as recently as 10 months ago. Obviously, I think anyone who opens a financial media website or gets some sort of financial media feed every day, you're probably reading about Boeing more often than not on a daily basis. Seemingly just about everything has gone wrong for this company. It's almost a perfect storm of headwinds, and no surprise that that's getting so much media attention. So the question is, does that offer an attractive investment opportunity? Or does this signal a long-term degradation of cash flows that the company may generate? And we would argue the former, right? And so anytime a company is getting this much negative media attention, we want to be very careful. And often we'll bring these companies back to our economic moat committee and take a closer look at the moat just to make sure that it is intact, or perhaps downgrade the moat. In the case of Boeing, we feel very strongly that this is still a company, believe it or not, that's worthy of a wide economic moat. Or just today, for example, the company announced some details about its plans to raise cash, and the stock is up nearly 2% as of now on that news. Why is the company still able to raise cash with relatively little issue? Well, it still has a lot of very attractive qualities that support that wide moat. So it has a very long backlog, a large backlog that covers several years of production. And what that means is that it actually has pretty reliable cash flows and a great deal of certainty, believe it or not, related to those cash flows because of the large backlog that it will have to service over time, right? And that's a typical characteristic of wide moat companies is, the certainty or reliability of cash flows it may generate. And Boeing still falls into that camp thanks to that huge backlog. Again, moving past the near-term headwinds, there's a really attractive long-term growth story here, as Boeing should benefit greatly from growth in emerging market revenue passenger kilometers traveled, right? So there's going to be a lot of emerging market demand for Boeing's aircraft. That's a very attractive long-term growth story. And at the end of the day, we think there's sort of an asymmetrical balance here between risk and reward. We think a lot of negativity is already baked into share prices. And of course, they've moved lower. They've moved lower since the stock moved into the Wide Moat Focus Index in June and then again in September. But at the end of the day, as the company muddles through this challenging period, we suspect shares will rise. And so it remains fairly undervalued relative to our $202 fair value estimate.